One thing I would like to add for everyone before we start this video is this is for the premium section or people that know the strat. So if you don't know the strat, this video is not going to help you. If you do, this video should be extremely useful. So just so you know, I am addressing stat trading members, but I figured you guys would like to see this too. So here it is. Hope you guys enjoy. In this video, I'm going to go in depth into how I manage trades, and hopefully you guys can learn something from this. And once again, this is not financial advice, so anything you do given the information here is on your own accord. But that all being said, let's get into it. So first, you need to know the strat. If you haven't watched Sarah's course or Rob's course that's linked in the education channels, or even the cheat sheet or anything, any type of knowledge of the strat, you need to go and learn that first, because this will not help you if you don't know the strat. So that being said, first, when we're taking entries and trying to manage some risk, we want to confirm multiple time frames, because you cannot add to positions that are not in force across multiple time frames. And then from there, we want to manage our risk tightly, which I will show you how to do. So in the first example, you're going to be looking at the day, week, and 5 minute on SPY. So first, we'll notice on the week. On Sunday night, we're like, well, inside week. It is a shooter, so we'd prefer the downside. But you'll notice the day hammer signal is telling us upside on Tuesday, which technically the first day of the week. It would be a Monday, but we didn't have Monday trading. So this is on Tuesday. We'll treat it as a Monday, though. So that being said, the day hammer should be stay above 44340. We have all day for this thing to be in force. And then the week inside bar, should we stay above previous week high 44522, we have the rest of the week. Meaning, if we take signals today or during this day, we can then continue adding to them until the close. Because so long as we are in force and above the daily open, any confirming signal is an actionable signal that we can take. So let's see how we traded that. So there is one thing on this chart called the parabolic SAR. That is the blue dots. It will allow you to trail your winning positions. So I suggest you use it. Now, we know our entry signal, such as the hammer fiver down here, is occurring above the daily trigger. How do we know that? This is occurring at 44403. The daily trigger is at 44340. So you'll notice that is confirming, meaning this should work. So entry occurs at the high of that previous 5 minute candle. Market order in. That's what we do. Initial stop goes at the low of the candle you enter on. Why? If that's going to work, it will not come back to there. Target 1 is the magnitude of that 5 minute. So if you ever see T1 or I say target 1 hit, we're talking about the magnitude of our entry signal candle, which is to make the new high. Once the new high is made, what do we look to do? At the very least, move stops closer to price. So if our stop's here, we could bump it up a couple pennies. And what I would suggest doing is break evening your stop. Why? A couple reasons. Well, when you're learning to trade, you already don't know how to make money. You actually are a professional at losing money. So we're going to lean into that. You need to be good at losing, meaning if it comes back to your entry price, you should be stopping out at break even or for as little as possible. And when we're talking about this, we are looking at the underlying. So if we're looking at SPY and you're trying to trade options, which is a whole nother thing we'll talk about in a sec, you should be using the underlying or using the SPY price chart to manage your risk. Because should that fiver work and not come back, if the spread on that option were to change and trigger your stops, you'll be very angry to see things continue going. And that will happen on things, especially things that do not have quite as much volume in their options contracts. And speaking of options, you should not be trading weeklies, not as a beginner. If anything, you shouldn't be trading them at all. Because options lose value with time. Meaning, new traders who like to hold losing positions will hold positions that lose money with time that aren't going in their direction, and they will lose a ton of money. So that is not what we want to be doing. Instead, when this new high is made, we want break-even stops. When this 5-minute signal has closed, we want break-even stops. So you can either do it when this new high gets formed or when the signal is over. Why do we do that? This 5-minute hammer actionable signal has 5 minutes. And then after that, we have what? The day signal and the week signal going in force. So we know if this works, we are now into the daily signal, which means we have the rest of the day. This only gets 5 minutes. How do we want to manage our risk, especially trading options? The first reversal against, we want a partial. If you're a new trader, partialing bigger here will get you more wins under your belt, but you will not make quite as much. If you're a new trader and you partial like a third or a fourth of your position here with break-even stops, anytime it were to come back to your entry price, you will stop out for a win. Because given you're not trading weekly options that lose a ton of value over time, if you're trading next week's or even next month's options, should it come back to your entry price, you'll stop out for maybe a couple pennies of the spread on the option with a stop market order. But since you have partialed for, let's say, 10% gain, that will pay for the loss on the spread. Meaning you are now a losing trader who is making money on losers, which means the ones that work, such as this one, will pay for anything else that you take that might fully lose, meaning it triggers and doesn't work at all. So let's keep going. You take your first partial here. Once that has occurred, the parabolic SAR should be moving higher. And what this does is allows you to trail your winning positions, meaning this will tell you time has passed and your stop should be getting closer. So you can trail your stop using the SAR. You'll notice after that happens, a new signal has formed above the daily open, confirming the day and the week. You can take this one right here, another 3 contracts. Once that signal has closed, you can break even the stops. And the stops goes at the same place right here. And then you'll notice they go up. Another signal forms. They trigger. You can buy even more if you want. Once that signal has closed, you need the break-even stop. Why? Because this happens. Oops. You'll notice the signal has exhausted once it has closed. We have the rest of the day and the week, but those are really long time frames. So if they want to sell for 15 minutes, they will puke it from the highs. And you can see 1 minute or 5 minute, 10 minute, 15 minutes, they sell. And they stop out this guy, and this guy. So should your stop be moved break even, you don't lose money up here. In fact, the first reversal on the 5 here tells you to partial what? This position. So you now have made money and stopped out. So you're losing position, you're still making money. You get to the downside, the downside, the downside. Notice the SAR flips on this candle. What does that tell us? Time has passed since this entry here and this entry here. Since that has occurred, we can then reevaluate what we know about the higher time frames when this happens. Because it's like, hey trader, time has passed. You should see if the things you thought before are still there. So it's like, this happens at what price? We'll just say 44576. It's like, okay, 44522. We are still in force on the week because we are like 40 cents above that, or 50 cents, or 54 cents, whatever. The day is still in force because the day hasn't closed yet, and we're well above that, so we're good, right? We can continue holding that, which means what? Any confirming signal that occurs after this SAR flips tells us they have stopped people out because people trail their stops using this stuff. And it tells us time has passed, meaning we've stopped people out, time has passed since our previous entries, and we're still going up. So we can take this 5-minute hammer. What happens? You then hit target 1. It falls back below the 5-minute open, meaning if you have a stop at the lows of the candles you enter on, such as this one, you would get stopped out for a loss. But since it has hit target 1, ideally it's break even. Even if it is a slight loss, you have already made money from your first partial here, your first partial here, and when you stopped at break even here. So you're still up. And then you reevaluate again. You're like, wait, so that signal worked and then failed. It's like, maybe something's wrong. It's like, maybe this is inside 15 or something, whatever it may be. But then right afterwards, a new signal forms. It's like, okay, wait, are we still good on the week and the day? Yes, we are. It's like, I can take that. That's actionable. Of course, reconfirming what we know to be true. And your initial stop goes at the same place. Your T1 is to take that out, meaning your stop goes break even when you hit that or when this closes. If you went break even too soon, you'll notice it would have stopped you out. So that can happen. That's why we ideally want the T1 first. But when you're learning, it's better to be tight and get stopped out more often than it is to lose money. And then you'll also notice the first reversal against goes all the way up here. So if you stopped out for a loss here and here, taking a third of your position from this signal here off right there would pay for all of those with one contract of the 3 that you bought. And since it is so far from your entry price, you actually don't have to exit up on that first reversal if you don't want to. You can trail this. And now it's like you have 1, 2, 3 winning positions. You stopped out of 2 of them. This one would be break even. This one would be potentially loss. And now you just give it time. It's like, okay, well, we've got the rest of the day, so I'm just going to trail this and I'll set an alert on it and go and do my day job or take care of my kids, whatever. All the way up here. There's the SAR flip. You can exit out, let's say, half of the rest here. And then you can, again, it's like reevaluate up here. Is everything still good? If it is, take the signal that forms here because you've now stopped people out. And this is a reconfirming signal. You'll notice it goes up. These go equal highs. The next one goes up after potentially stopping you at break even, which can happen, but the 5-minute didn't reverse. So again, you can change this stuff around. You can figure out what works best for you, but the tighter you go, the more wiggle room you're giving yourself to actually learn how to do this. Because if you are not as tight as we're talking about right here, if you're trying to follow the stream and you are putting stops wide as can be, you're going to get extremely frustrated. You're going to be like, these people don't know what they're doing. It's like, no. You don't know what you're doing. We're here to teach you. So speak up. If you're having problems, speak up. Tell us because we can fix them. Like, for example, Nick, he was like, Sarah, I'm having trouble with these entries and stuff. And she was like, here, use this. Use actionable windows instead of just like having to remember it. And that fixed it. He was like, yeah, AMD, which we're going to talk about in a second. I could have got this, 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 and this. It's like, yeah, that's what we did on the stream. Perfect. Now he knows. So ask us questions. Next. Just to recap, when a trade goes against us, what do? If target 1 has already been hit, we need to break even our stop. So we might stop out of the spread if we're trading options. We might lose some money, but it needs to be break even on the underlying, meaning the thing we are trading. And this is because if it is true that we have hit target 1, also known as we have made a new high, this means we have new high risk or broadening formation risk because we know things make new highs and new lows all the time. So if it makes a new high and fails, the new low is highly likely to occur. So we know not to hold that. This also means wide stops are not expedient and they will make you a losing trader and they will frustrate you to no end. And if target 1 has not been hit, that's even more important, or that tells you even more that you should reevaluate what we know to be true. So you ask yourself, are the higher time frame signals still in force? Do we still have time frame continuity? Do we still have magnitude? If all of those are yes, you can then look for a new signal. So let me give you one more example from Friday. And this is one we traded and I'm still holding runners. So after this one, hopefully you guys get it. And I'll just wish you guys a good rest of your weekend and we'll get to it next week. So now we start at the higher time frame. So you'll notice below the month open, we are red, meaning the sellers are in control on a monthly basis, or at least they're more aggressive. If they're in control, we will make the new low. They just haven't done it yet. The week, you will notice the Rev Strat week with the shooter telling us what? Below here, we are in force to try and take this and this. We ran out of time, which I mentioned at the open on Friday. I was like, we have the rest of today. If we run out of time, that happens. Whatever. The day gives us a confirming signal, the 2-2 reversal, which goes in force under here, meaning anytime below daily open right there, 106.07, we have full time frame continuity where the week is red, the month is red, the day is red, and we are reversal in force on the day to re-trigger the weekly reversal, which is right here. So I'll give that a different color so you can see that. Like, that's the weekly reversal. So we're re-triggering that given we take out daily magnitude. So at the open, how can we trade this? Well, we can short it below daily open with a stop at the high. It's like anytime this is red, we can be short with a stop at high day. That can work. What did we do? I mentioned that, and then that entry actually would have gotten stopped out. So sometimes you get stopped out. You just have to eat it. You have to be like, yeah, now I know. I took another stop out. I need 999 more, and I'll probably be a lot better by the end of that. So what did we do? We actually used the lower time frames. And the reason we did was because QQQ was a kicking pattern. And we knew that AMD and the chip stocks in general were the weakest ones in the market. We talked about that in the morning. And if that's a little confusing, you won't get it all right away. Using the simultaneous breaks and confirming things across the market, it takes a little time. But you didn't even have to know that. What you will see is the hammer forms. We know not to take that because we want to short this thing. Because we're below the month open still. Below the week open still. The day is just slightly green. The shooter forms here. That is an actionable signal, which means you can short right there. 106.26. Where's your stop? Right here. 106.53. You are risking 29 cents with the weekly trigger, $1.13 from your entry. And daily magnitude means, or daily magnitude would be pretty much right here as well. So we take that and it works. What do we do? Once this signal has closed, the 1 minute, break even stops. Why? It should not come back. All right. New low day gets hit. Is that exhaustion risk? Yes, it is. Does it reverse? No. Inside, inside, down. You can add short here if you'd like. And since things are still dropping, time frame continuity, we are red across all time frames. You can give yourself a slightly wider stop. That's fine. Meaning, if you take the inside bar and down here, you can leave your stop up there. Because if you're short from here, you add like 2 more contracts to your 3 contract position, which hasn't reversed, so there's no partial to be had. You enter here, add right there. If it does stop you out here, you stop out of both for profit. So you can leave it wider. I wouldn't suggest it for newbies, but you can. And you'll notice break-even stops would have stopped you out. That's fine. That's the second stop out. You just need 998 more, right? Then you'll see again, the confirming rev strat signal, slight higher high, 2-2. That works, closes, does not come back. That's a winning position. You now have 1, maybe 2, 3 entries. And then you'll notice 2, 2, 2, 2, 2, first reversal against you. Can you partial that if you want? Yep. Can you trail this up here if you want? Yep. Since you have break-even stops, you get the liberty to do whatever you want. And that's the whole goal of the strat. Make a winning position, manage it however you'd like. We like to add because we know when they win, they're going to continue to trigger higher time frames to keep going. So what do we do when this pops up? It's like, hey guys, popping up, first reversal against, but if it goes back down, we'll just short it. It's like, here's another signal short. 2-2, new low day, break even stop. Does it come back? Nope. Right down. Another rev strat, down. I don't think that was inside bar, but you can see just down, 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 down. And on the 1 minute, what does the SAR do? Tells you right here, reevaluate. It's like, okay, well, I have a lot of short positions, so I'm going to partial. Maybe I'll partial my most recent shorts. I'll take off half of this one and half of this one, and then leave the other 2 because it's like, is it going to rally all the way back $2 with full time frame continuity against? Probably not. So this tells you reevaluate. Then what happens? You can get compound inside bar that moves lower, which has no signals for us to really enter on. You had a shooter here or right here, which would have stopped you out. That's fine. You already have made money. So you're just giving back slight little bits of their house money, right? And you'll notice, where's the next signal forms? There's one here, makes new low day, break even your stop. When new low day has been hit, it comes back, you get out for break even. That's fine. Find the next one. This one triggers down and fails. Fine. Find the next one. Inside and down right here. Does it come back? Nope. 2, 2, 2, 2, 2, 2, 2, shooter 2, 2, low a day, first reversal against. You just made another 76 cents, which on options, it could be another $40 a contract, maybe 30 if you're trading slightly out of the money. It's like, that's pretty good, ain't it? And then it shooters right away. It's like, yeah, puke. And then you'll notice they go stuck inside. and there's some stop outs. And this is if you're sitting on the 1 minute the whole day, which we don't do. Like once we had those entries this morning, what we did, we were like, well, let's just let it go. It's like, here it is. Shooter fiver, 2, 2, 2, 2, 2, 2, 2, 2 against, nowhere near stopping out. 2, 2 back down. All right, 2, 2 against, nowhere near stopping out. 2, 2 back down. 2, 2, 2, 2, 2, 2, 2, 2. Shooter inside bar and up. Tells us to reevaluate right here. And then again, is it anywhere near taking that out? No. It's like, let's see if it does the broadening formation and goes lower, which you'll notice. Slight higher highs. I believe that was a slight higher low. Nope, slight lower low. Slight lower low, slight higher high. They take the highs of it and then puke again. So you can continue holding. And if you want, you can go higher time frames. It's like, well, once I get these shorts, I'll trail the 15 minute. It's like, why? Well, because it shouldn't come back. It's like, okay, hold it, hold it, hold it. The last 30 minutes of the day, they're like, yeah, get out of your short position. It's like, yep, all right, fine. Have a good weekend, guys. It's really that easy. Does that mean does that mean you're not going to have some trouble with it? No. Everyone's going to struggle with something new. But you guys need to follow this. Tighten your stops. Listen to what we're trying to tell you. And if you're having trouble, let us know. We want to help you guys out. And we can't help you if you don't let us know. And I'll tell you right now, it's like probably 15% of the people actually talk to us. So if you're the one being quiet, it's your fault that you're not doing well. So face your fear and just say, hey, Alex, I don't know this. It's like, awesome. You don't know. Now you're going to know, and you can use that to make some money, or at least, at the very least, fix whatever problems you're having, right? So I hope this was beneficial. I will see you guys Tuesday next week, and we're going to continue talking about this stuff and trying to drill it into your head. So I hope you guys have a good rest of your weekend, and I'll see you then. And